Silver outperforming gold? Is this just the beginning? Hi, everyone, and welcome to Ainslie Insights, brought to you by ainslie.com.au, the home of Ainslie Bullion, Ainslie Crypto, Ainslie Wealth, and the Gold and Silver Standard. Be sure to have a look. Today, welcome back, Drew. He's always looking at gold, but is very passionate about silver. We've had this discussion a few times about the potential of silver in the current environment. And I know he's been looking at a few metrics recently, which have made it really even more interesting to look at. How are you going today, Drew?
Yeah, good, Chris. How are you?
Yeah, good. Now, look, we were just talking before this about the gold silver ratio. Now, we've been discussing this on Insights for quite a while, and it was up above 100, and we were talking about that quite a bit and saying, that was almost a no-brainer up there, to be potentially looking at silver over gold. It's had a big dip recently, but you were highlighting no one's really talking about it. Talk us through what's going on there.
Yeah, absolutely. When it shot up over 100, it's all anyone could talk about. Oh, it's so frustrating. The ratio's over 100. And you were hearing all of these kind of clickbaity titles about, is this the end for silver? Is this a new world where the GSR is just going to be in triple digits now? Have we just got to adapt to this world where gold just outperforms, or everything else in the space from here on? And since then, it's quietly trended back down to 87. And like you said, seemingly crickets, right? So I thought it was important to just highlight this trend and then zoom out like we usually do, look at where we are on the macro cycles, the 20-year and the 80-year cycle, just to build that expectation that this is exactly what should be happening at this stage of the cycle, what to expect moving forward. This is stuff that we've already spoken about and we have looked at these macro cycles. But for anyone that might not have seen those charts, for anyone that might not have this information, that'll be quite useful. And for anyone else who's seen this before, it'd be really useful just to see where we are in that cycle to show that the trend is on track and just provide a quick update on the gold to silver ratio. So I can pull up a quick chart, but it's really since the 31st of March that silver has been outperforming gold quite significantly. And the question that people keep asking me is, has this outperformance on a macro trend begun now? Is this the beginning of silver's outperformance of gold in the larger sense? So I thought we could answer a few of those questions with the video. And I'll start by just looking at the GSR today. And if you're able to see that, this is where we are. So we've got gold in yellow and silver in white and the GSR in green. Now I've marked off this low from the 31st of March. And you can see from this point, silver's really been taking the lead. Gold is consolidating in a healthy way and sort of getting ready for the next leg up. But silver's really front running this next move. And you can see here the gold to silver ratio. This is where it was sort of hitting above that 100 region. So that's the scale on the right there. And you can see the gold to silver ratio at this point, when we had this spike up, it's all anyone could talk about. And suddenly, since it's moved down, this is really now when people should be paying attention that we're back at 87. And this downtrend could actually continue from here on in a steady fashion, leading into that macro land cycle crash of the 18.6-year land cycle, where you'd see most assets rising together into that peak. But then you have a broad-based financial crash where you've got stocks and land really struggling. Essentially, those markets crashing and then spending years recovering, while gold and silver outperform. And during that time, the GSR, the gold to silver ratio, that's when it really significantly falls off. So is this just the beginning? Well, cyclically speaking and historically speaking, yes, this is the beginning of that downtrend. Now, silver is more volatile than gold, so we will see volatility along the way. We will see the GSR spike back up one more time during that crash, because at that point, gold outperforms basically everything and everyone's running to cover. So, when you've got an asset that's the ultimate flight to safety and you're pricing silver against that, you will see a spike in the GSR, but it's a very short-term spike. It's something that will last a couple of months if history were to repeat. And it's after the crash in the recovery phase where the gold to silver ratio falls off in a much more significant way. So this is just a short-term update where we are today. Since the 31st of March, you're seeing both move up, silver outperforming, and the gold to silver ratio steadily trending down. And if we look at the land cycle, the end of the land cycle, just to build some context of what happened with the previous peak, This is a chart we've looked at a few times. For anyone that hasn't seen this, I think it could be quite useful. But just really quickly to look at this one with the global financial crisis in 2008, which was the peak of the previous land cycle. We've got stocks in pink, putting in their peak here, and then crashing, and then spending many years slowly trying to recover that. This is from 2009 to 2011, so just this is 2 years. Now, you can imagine someone having their self-managed, well, not self-managed, but someone having their super funds or their retirement in stocks, which is very common, leading into this, losing 60% of their value and having to work for another 3 to 5 years just to break even. It's not a situation that anyone would want to be in. What you've got here in blue is the land market, which started trending down before stocks. That's actually a leading indicator that's worth keeping an eye on for where we are in that macro cycle. If you see a divergence with stocks continuing up and land over quite a long time frame, I mean, you're looking at this, from sort of early-ish 2025 all the way down to the peak here. So you've got multiple years of that divergence, with it really kicking in over the last sort of year and a half. Land starts going down earlier, but then puts in a bottom at the same time as stocks. So that's the absolute panic. Now, all the headlines and all the panic, they really came out sort of around this time here. So at that point, most of the moves already done, and they were only really calling it a financial crisis around this phase here. They sometimes refer to it as the the 2008. It's really late 2008, early 2009 that people were paying attention, but that downtrend started a lot earlier. The important part that we should focus on for this video is the gold to silver ratio. Once again, we've got that in green, we've got gold in yellow and silver in white. And you can see here, leading into the crash phase, the gold to silver ratio was trending down in a very steady way, similar to what we're doing today. Now, from a timing perspective, the peak of this cycle should be anywhere between 2024 to 2028. So we are in that timing window. The average time frame would be early 2026. So we're still on a peak right now. It'd still be shorter than average. But if it was to be an average cycle, sometime into early 2026 is when you really need to start paying attention. We'll probably start seeing divergences between stocks and land. But during this time, we can already see the gold to silver ratio behaving as we would expect it to as we get into this final phase where everything is blowing off together. Gold's moving up, silver's moving up, stocks are moving up, and the gold to silver ratio is trending down. What's important is after the crash, you see stocks and land crash and spend years trying to recover. Gold and silver, they have a quick dip for a couple of months, and then a couple of months later, they're back at their all-time highs. And while this phase here, where land and stocks are spending years recovering, gold and silver are putting in parabolic moves and putting in new highs after new highs. And that's where speculation enters the precious metal space. It affects silver more than gold. The silver market cap being a lot smaller will result in much higher percentage gains for silver once speculators start entering the space, which tends to happen in this because no one's speculating on the stock market or on land at this phase here because they've been so badly beat up that investors are looking for other places to put their money in. You can see what silver did in this phase. It basically went vertical, and the gold to silver ratio fell off in a much more significant way from that 75-ish region all the way down to 35-ish. So, you've really doubled your gold if you were holding silver instead, and then converting it from silver back to gold once you've got that sub 50 gold to silver ratio. So the long-term average for that is 50. A very simple trade is to buy silver when it's well above 50 and to trade it in for gold when it's well below 50. And to build that expectation, well, this is where we sort of are today from a timing perspective. If a peak is to be expected early 2026, we are in this final phase up. And to see the gold to silver ratio trending down slowly today is a good sign. It shows that we're on track. I would expect another one of these for sure once the crash happens. And then following that, once speculation enters the precious metal space, you would expect silver to outperform. So just to point out that we are on track, we are somewhere in this phase here now, but it's really important not to get caught up in greed and complacency in this phase here, just to make sure that you're well set up for this phase here. A combination of gold and silver works well. Me personally, I'm obviously quite heavy, more on silver, just to capture that outperformance during this next phase.
I don't want to go too heavy into reinforcing your bias on silver. But something that's caught my attention recently is the talk of just how significant the investment in infrastructure around AI is going to be. And the numbers blew me away, and I don't know them off the top of my head, but it was in the trillions of dollars of just infrastructure that needs to be built. And it's sort of, I remember thinking at the time when I was reading whatever I was reading and going, I wonder if that ties into some of this cycle stuff, potentially more so than even in the past for silver specifically, because you could argue that maybe in that environment, yes, gold still plays the role that it plays for currency debasement and the hedge reasons that people have always had it. But do you actually see silver being used industrially at a scale we haven't anticipated for quite a long time? Because the comparisons that were made were comparable to what China did when it built when it basically brought its whole lower class up into middle class. When it did that, that was a huge amount of infrastructure building, and they were really suggesting that's just how big it could be for AI infrastructure. How do you think about that from the silver angle?
That's such a great point. I'm actually really glad you brought that up. So, what's interesting, of course, for silver, most people will be aware of this, is the industrial use cases. Now, it's used in solar panels, and that's really what I want to focus on for this answer. You know, a lot of people will wonder, well, AI is clearly not going anywhere. It's just getting started, if anything. And there is an exponential growth phase of AI. Well, how do I capitalize on this trend and make the most of it? You know, so people will look at investing in AI companies. The problem is similar to the dot-com boom. You put AI at the end of anything and it'll get overvalued almost certainly. Most of it is smoke and mirrors. And how do you work out which ones are the best ones? Well, you really can't until after the fact. Once you've seen the overvaluations and the crash, it's out of the dust that you can choose what to sort of get involved with the AI side of things. But what you mentioned before is so important, that the infrastructure around the AI, the energy required for this revolution is incredible. Now, during the gold rush, it was the picks and shovels that, you know, the manufacturers of the infrastructure to help get that gold were the people that made the most money. So with the AI revolution, I think it's the energy sector that's going to benefit the most. And so, you know, what is the AI trade? If you know, if that's the question, I really think it's an energy trade. Now, if you're looking at energy, yes, there's oil, there's natural gas, but silver is used in solar panels. So the solar industry is going to, I think, absolutely explode simply to support the requirement of energy for the AI revolution. Now, you know, you overlay that over the cycle stuff, and yeah, we've got, you know, the standard expectation for precious metals to outperform cyclically and speculation to enter the precious metal space. And yeah, of course, silver is going to benefit from that. And yes, we have the green revolution, and of course, silver is going to benefit from solar panels in general. But when you look at AI coming in and the energy intensive, you know, requirements of that, the energy trade is also going to benefit the silver market. So it's not just the usual industrial side of things, but the energy required for, you know, with the solar panels that's going to benefit silver massively. And if you overlay all of this on the job market as well in general, and you look at how much AI is probably going to decimate the job market, that creates even further financial instability, and that further benefits gold. And the more gold benefits, the more speculation comes into the precious metal space, and the more speculation comes in, the more silver will outperform. So when I say decimate the job market, if you look at, again, cyclically speaking, it's not just the 20-year cycle that you should pay attention to, it's the 80-year cycle. 4 20-year cycles roughly will make up one 80-year cycle. And currently, this 20-year cycle is the fourth 20-year cycle, which means the 80-year cycle is ending as well. Now, the previous 80-year cycle that ended was the Great Depression. So after the Great Depression, you had gold and silver go on like a 35-year long bull run into the 1980s peak. So yes, you would expect gold to do really well at the end of a land cycle because people need a flight to safety. But if it's the fourth land cycle in an 80-year cycle, and you've got a Great Depression scale of recession, which the reason I'm saying that is because if you overlay this AI point on it as well, not only would we expect a Great Depression scale of recession due to where we are with the 8-year land cycle. But you can see what causes these things. Now, whether it was AI or whether it was something else, it would have happened regardless. But it's very interesting in real time to see, well, we would expect a Great Depression scale of recession. You could have said that even 10 years ago. But what exactly caused it, you couldn't say 10 years ago. Now, as we get closer to this time, you can say, well, it's probably going to be AI that destroys the job
Pretty
market.
clear. Yeah.
It's pretty clear now. And
Well,
so,
actually, I find it really interesting, this particular point you're making about energy, that I think has been missed by a lot of people. We've heard that energy was effectively going to zero. We've heard that for quite a while, that you weren't in this future that was unfolding. Energy would be abundant, energy would be cheap or effectively free. That may not be the case here, how you're describing that, because maybe we just misunderstood how much energy we were talking about. And solar panels are certainly not free. Like the concept of solar energy, I mean, Elon Musk is very big on this. I know there'll be a lot of people watching this who go, solar energy is nonsense. But it is, in terms of the scale necessary to run everything. But Elon's angle is ultimately we need a lot more solar energy in the process. But even that is not free. It's still very complicated to extract.
absolutely, it's complicated to extract, and more than that, it's complicated to store as well. So whether it's oil, natural gas, uranium, so whether it's lithium for batteries or silver for solar, there certainly is an energy trade there, and there'll probably be a combination of a lot of different sources that we're tapping into. Now, a lot of this stuff is still very much in its infancy, especially if you're looking at nuclear and solar. We're not really there yet in terms of the infrastructure. So it will take a long time for the infrastructure to get built out. But, energy might be abundant. It's certainly not going to be free. But when you see the exponential growth of AI and the kind of energy required for it, I really don't think we're quite there yet. And, looking at a sector that's sort of hated and unloved at the moment, like energy, something like oil, you couldn't get someone to invest in oil today unless, they were really in the industry or something. But you speak to most retail investors and you tell them to take up an oil trade. And by no means am I saying invest in oil today, because that has its own cycles. And if you are looking at cycle lows late 2026, who knows? Yeah, I really should be careful what I say here. But if the cycle low isn't here yet, it's probably a bit premature to make that trade now. But there certainly will be a requirement for energy with AI. So speaking about silver specifically, the energy required will move it up. But I really think with AI, more than the energy, it's going to be the decimation of the job market that results in gold doing really well, that results in speculation in silver. And that's, looking at some sort of Great Depression style recession, we'll see a multi-decade bull run for both gold and silver. And it's during these multi-decade bull runs that the gold to silver ratio, it doesn't just spike below that 50 level like it did after the GFC. It actually ends up spending decades between 20 to 40. Well, that's what happened in the previous one, at least. And I can really quickly pull up this chart as well. This is something that we've looked at before, but it's probably my favorite chart of all time, just because of how often we look at the gold to silver ratio. But these are the 20-year cycles that I was talking about: the first turning, the second turning, the third turning, and the fourth turning. Now, just really quickly, first turning involves building new institutions, new global financial systems. The second turning involved, so that was obviously the gold standard, IMF, Bretton Woods. Then the second turning involves more revolution, focus on, rather than unity and like societal oneness, you have individuality. So you have the hippie revolution and all that in the second turning. And the third turning is all about excess. So you had the 80s and the 90s. This is where things get over leveraged and cracks really start to appear. Fourth turning involves chaos, breaking down of the systems, generally wars, serious recessions, and then building up of new systems. So the idea is that we're currently in a fourth turning, and the end of this land cycle will be the end of the fourth turning. The previous fourth turning had the Great Depression ended with World War II, and this light blue line is the gold to silver ratio. So you can see in the previous fourth turning, or leading into the end of it, the gold to silver ratio had spent multiple decades in the 70 to 80 region. After the Great Depression phase, and this is what I'm expecting to happen with AI decimating the job market, you had silver. This is the silver USD price going like a 35-year long bull run During this time, gold was obviously moving with silver as well. But the gold to silver ratio fell off a cliff and spent decades in this 20 to 30 region. And this is where silver really had an insane blow off rally. So if we are looking at this type of an event with the Great Depression, we are looking at the end of a forward turning. We are looking at, what might cause these things. I wouldn't be surprised to see multi-decade situation of the GSR being down there with silver really outperforming. So this is a, once in a generation trade in terms of each turning has this trade once, but it's on a once in 100-year scale where it's really from the fourth to the first turning that you get this opportunity. So yeah, look, I tried to rein it in terms of being too bullish on silver, but it's it's hard
Well,
to
I'm
do
not
that.
helping the situation, and I don't like giving you too much leeway there because it starts getting me very bullish about it. But I think my final question, actually, to wrap it up along that line of thinking, is just, even if you're wrong there, I mean, it's probably more of a statement than a question, but even if you're wrong, I can still see the bullish scenario. Let's say, because a lot of people argue, no, we've been through this before. We've been through revolutions of this scale before, and ultimately people still had a job. Their jobs just changed. So they would argue, the AI stuff, yeah, okay, Drew, you're saying it's going to cut all those jobs. I mean, I personally believe jobs are going to be decimated, but I could be completely wrong. And we just have more human jobs than ever because the AI can't do something that I haven't figured out yet. But even if that's the case, it still seems pretty bullish for silver in that scenario because it's certainly not going anywhere. I think even people who make that argument, it's not taking your job, it's certainly complementing your job. What do you think? So to wrap it up, sort of, even in that scenario, let's just say it isn't quite as bad doom and gloom to create the equivalent of the Great Depression, which a lot of people
Yeah.
are expecting. But let's say it's not that bad.
Yeah.
I don't think
Yeah.
I still think the trade works anyway.
Exactly right. So regardless of whether the job market is affected or not, right? Let's say for some reason this incredibly intelligent revolution has absolutely no effect on the job market, right? Let's just say. Um, it's not that people aren't going to use it. Let's just say it creates a whole bunch of other jobs, and that, of course, logically a transition from A to B, even if we have a lot more jobs at the end of it, which I don't think will be the case, but let's say we do. That transition from it taking jobs away to adding more jobs, it will still be messy. It will still involve some sort of economic turmoil. But let's just say not only does that happen where it adds a lot more jobs instead of taking them away, but there's somehow an entirely smooth transition and AI has absolutely no effect on the job market. Well, in that situation, it's still not going away. It's still something that people are being used and it's still very energy intensive. So, regardless of whether it decimates the job market or not, you're still going to need the industrial side of things. You've still got the energy trade. And personally, regardless of what causes what, it's more, cyclical stuff for me. So, I'm always looking for a reason why this shouldn't work out because it's important to, poke holes in it. And what I'll say to that is to everyone that I've asked, because I haven't got an answer yet, I'm actually going to ask AI why this is not going to work out. So I think that in itself proves where we're going with this overall trend.
Well, if you're like me, you only show the AI answers that agree with what you're saying anyway. So at the end of the day, we're still human, regardless of what the tech does. Look, we always appreciate you coming on, Dhruv, and giving us your insights into what is going on in this space. We covered a lot of ground today, whether it's the GSR, sort of where we started, or ending up on how AI even impacts it. But every time we come out of this conversation, I end up more bullish on silver. So I'll need to get someone, a bear on to try and balance you out a bit. But anyway, thanks for your work on that, as per usual.
Thanks so much, Chris. Good to talk to you.
Good to talk to you as well. Thank you, everyone, for watching. We'll chat again soon.